once metal markets make a major upswing in price and are no longer being suppressed, where will the liquidity come from in order for us to sell at these much higher prices?
Well, history shows us that not everybody loses all of their wealth. Those that are in the right place at the right time with the right asset will retain that wealth. And that's where that liquidity comes from. Because at that juncture, everybody knows that the currency is absolutely worthless. And they're trying to hold on to whatever purchasing power they can. So the demand actually grows in those that are in the top 10% or whatever. I don't know what the percentage of the loss is, but I can tell you in Venezuela, 90% of the population ended up in abject poverty. Maybe globally on average, it's usually about 80%. So the liquidity is going to come from that 10 to 20% of the population that still has the wealth, and their standard of living doesn't really change as much, but there are a lot more opportunities for them.
Yeah, and to say it in a different way, because we get this question a lot, and it's people are naturally, confused by the answer to it sometimes. So another way of saying it is, for example, gold is like just pure bullion, right? It generally tends to hold its purchasing power over time. So if we get into a hyperinflationary environment where you are, let's say you made $50,000 a year, and as we get into hyperinflation, you'll be making more in nominal terms, right? It'll have less purchasing power, but let's say the value of the dollar, the value of that salary goes to 200,000. Now it won't adjust immediately, but over time it does adjust if you're working and you get paid more in dollars, but they don't buy as much.
And it won't keep pace with inflation. The government will mandate
it
higher
doesn't
wages,
keep up with inflation, but people will be making, my point is that people will be making more money in nominal terms because of the massive amounts of inflation, right? So not everybody will be able to afford gold, especially as it gets into the later stages, like what Lynette said, right? Initially, people will be able to do that, but as we get further into a hyperinflation or a reset type scenario, by that time, most people are in abject poverty because it's just wiped out everything that they own. That's why it's definitely great to own it now, because you can always liquidate it, whether that's in your currency now or you could liquidate it, right? You could, let's say you lived here in the United States and we were going through hyperinflation, you could always liquidate it in Europe and get euros and then convert that to dollars.
You could also just convert it right to dollars.
You could, but I'm just giving another example of how you can, if this is a question specifically of who's going to be able to buy these coins.
Well,
right?
It's true. And I want to add something to that, and that is that both physical gold and silver are used across every single sector of the global economy. So there's always going to be demand for gold and silver. Sometimes it's higher, sometimes it's lower, but there's always demand. At least it has been for 6,000 years. So is that suddenly magically going to change? No, it actually gets more intense as people understand what's really happening to the fiat.
Correct. There'll be a massive amount of demand. Everyone will want it. As we get further into a hyperinflationary situation, less people will be able to buy it.
Yes.
And those that have the most wealth will be the ones buying it because they know it's the only thing that really does its job of holding your purchasing power over time. That's why you want to own it now. And I know what you're saying, like, hey, if I buy it now, who am I going to sell it to later? Well, there's always a buyer. There's always a buyer. And if the United States is the one that's experiencing the hyperinflation, but for whatever reason, the Eurozone is not. Let's just hypothetically say that.
That's hypothetical.
Right. But you can sell it for euros, convert it to dollars, right? Swap it, and then have more dollars in your possession. So there's always buyers, different markets that you can sell to get to the cash that you need to do what you need to do. But mark my words and Lynette's words, is that gold and silver, if we get into a hyperinflationary environment, gold and silver are going to be the things that you want to maintain your wealth over time. How come the dollar has officially 3 cents of purchasing power left? Can you show the formula on how to get to those 3 cents?
Well, when I say 3 cents, it's because the Federal Reserve Education Department, the Fed, that's what they're saying. I actually think it's a lot worse than that. I don't really know the formula that they use, but that's the official number. And we can put the link to the Fred, to the purchasing power of the consumer dollar chart in there so you can see it for yourself, Lorena. No, I can't give you the formula because I actually don't know what that formula is, but I know what the Fred says. And I know that the central banks and the governments have a tendency to change the formula of how they calculate things so that it looks closer to what they want, which is why I say it's probably worse than that. The only thing that's holding it together is public confidence. So people are still willing to work for it.
It's actually on the back of one of your face dollars.
Oh, yeah.
Are they in here?
Yeah.
So,
I think so.
the chart that she's talking about is actually, the 3 cents comes off of the Fred chart that shows the purchasing power of the consumer dollar from 1913 to present. So when the Federal Reserve took over. And it looks kind of like this, but it doesn't have the dollar bill on it. But it's basically 1913 being all the way over here, present day being all the way over here. And it shows that when the Federal Reserve took over, a dollar was worth $1, and now it's worth
Right. It
3
could buy
cents.
$1 worth of purchasing of stuff then. And a great example is, back in 1913, if you had a dollar bill or you had a $1 silver coin, so an ounce of silver, or this is a $20, but you had a $1 gold coin, which is about half the size of a pinky fingernail, it's a 20th of an ounce, you could have bought 11 loaves of bread with any one of those. Today, you're getting, if you're lucky, a quarter of a loaf, probably less than that, with the dollar bill. You can still, last time I checked, you could still buy 11 loaves of bread with the silver dollar, not in terms of the spot market, but in terms of what we would have to pay for this, the wholesale retail market. And, again, last time I checked, you could get 100 or 135 loaves of bread with that $1 gold coin. So I think that's a good example of the loss of purchasing power. But if you want to see it for yourself, then just go to the Fred. We'll put the link in there to the purchasing power chart, or just do a search on FRED, purchasing power of the consumer dollar, and the Federal Reserve chart will come up and you can see it.
Yeah, and the actual, what it says on the top of the chart is Consumer Price Index for all urban consumers. So you'll know you hit the right one when you see that at the top. But yeah, and I think that's I love it when you do that illustration, because it's one thing to say there's only 3 cents left of the purchasing power, right, of that dollar. But back then, the dollar, 1 ounce of silver and a 20th ounce of gold and a $1 bill could all buy the same thing. And now the dollar buys nothing, the silver buys something, but the gold buys even more, right? And that gold's really been the true, strong performer.
Well, yeah, like it has for thousands of years. They just don't want you to understand it.
Yeah.
And so they have to manipulate the visible price. But, do you really think that Wall Street, in any instance, is going to tell you what the true fundamental value of any asset is?
And on the collectible side, since 1971, since we have a measurement from 1971 to present, this has outperformed bullion gold, so just the regular spot price of gold, by more than 2 times. I want to say it's like 2.5 times or 3 times to 1. I'd have to look at the numbers, but it's somewhere between 2 and 3 times what bullion's done of doing a better job in performance, even more so than, the dollar, silver, bullion gold, and then collectible gold.
Absolutely.
Even better performance.